Welcome back, everyone. SoFi stock is up 9%, and we have officially gotten all of the data that I need to talk about one of SoFi's largest factors of success, and that is the deposit. SoFi, unlike just their pure member growth, which honestly has been fantastic, SoFi's deposit growth is based on how much people actually trust that brand rather than just signing up with them. Now, one of the ways that they've been able to build this trust and gain more deposits over time has been through the SoFi Plus program. SoFi Plus is giving out tons of rewards across the entire ecosystem of SoFi if you sign up with direct deposit or give a monthly fee of $10 to boost up your total APY with a bunch of other member benefits as well, like I just recently said. So this is twofold. One, once you get people onto SoFi Plus, they end up depositing more. But then the second benefit is that they also cross-sell into other products that are also revenue generating. SoFi is so confident that this works that in fact they've started to pay an additional 0.7% for the first 6 months to make sure people switch over to SoFi Plus to just try the products. Cash App on their last investor day had recently said that the direct deposit user ends up bringing roughly 6.5 times more deposits than their regular peer-to-peer transfer customer. So if you can get someone up to a direct deposit, that's better than any other cross-sell that they could possibly imagine. Along with this, you also see SoFi boosting up their total amount of debit spend per account. If you also include the amount of new accounts, you're starting to see them roughly break $5 billion a quarter in total spend across debit and on credit cards. Deposits also make up for the large majority of the funding for their new loan originations, and this all goes to feed a better percentage for what they would get through customer deposits, even if they're paying a total of 4.5% versus what they would get at a normal certified deposit or even warehouse facility loans. Now, if we end up looking at SoFi versus the rest of the competition, we have all of the data going back to whenever SoFi originally became a bank back in Q1 of 2022. If we take a look, we can see just in this slide what their Q3 2025 is for this and the remaining other 26 banks that they compare against, quarter over quarter change, and then year over year. Quarter over quarter being right here, and SoFi is actually the largest percentage. The next one up is Axios Financial, which comes in roughly half the change quarter over quarter. And then year over year, SoFi also comes in at the highest. The only one that roughly comes in near it is Capital One, and that was due to the acquisition of Discover Financial Services. So that's boosted due to them paying a lot of money to find new deposits. SoFi isn't acquiring businesses for their deposits, yet they continue to grow at nearly 35% year over year. Now, an interesting thing is that if we add up all of these deposits for every single bank, we can actually track not only what the market share for each bank is, but also how the entire total deposit base is growing over time. And SoFi's deposits we can look at over time, and as well as the speed at which they've been growing those deposits. And in the last 3 quarters, we dropped all the way down to only 26% growth, then 28.5, an increase over the last quarter, and then in Q3 of 2025, 35% growth, even faster than what we saw on their member growth. Now, a lot of people chalk this growth up to them just offering the best rewards in the marketplace, showing a much higher rate of APY than what the other big banks would offer. So people are obviously going to flee towards SoFi, but yet the rate in which SoFi is profitable is not going to be as high as the big banks, even though currently they have more deposits, which to some degree is true. Now, if you take a look between Q2 to Q3, yes, there was a Fed funds rate cut at the end of the quarter of Q3, and the rate ended up increasing a little bit, but that had to do with their new marketing strategy of offering APY boosts, which are only temporary and should adjust back down to the standard rate once their time is up. Now, as you can see, SoFi is just following the Fed's funds rate. Now, we did a little bit of a tightening here, but like I said, that was due to normal promotions, which obviously they're seeing the benefit from offering more loans to more customers through the loan platform business. However, if we take a look at the total deposits per bank once again, but add them all up together, just looking at the total market share over time, and then put on top SoFi's deposit market share, what we end up seeing is that they're growing much faster than the total market, and that they've officially gotten to over 0.2% of the total deposits. I know that seems extremely small, but that's actually a good thing. What that means is that SoFi can continue this strategy without hitting any sort of blockage, without making any real headlines against the big banks. they still look at SoFi as if they're an extremely small player, but it's the rate of change that should impress investors. It means that they could double their deposits, 5x their deposits, 20x their deposits, while still remaining a normal percentage of the total US deposit base. And I don't even think SoFi has to offer that high of an APY to continue winning this much market share. Take, for example, Lending Club, one of SoFi's premier neobank competitors that also has a banking charter. What we end up seeing is that from Q1 of 2022 to Q3 of 2025, Lending Club had gone from being a large beneficiary of a ton of deposits and actually having way more than SoFi to now being way less than SoFi on the account of roughly 10 billion total US dollars. So having a 10 billion lead to a 10 billion deficit while offering more APY almost the entire time. If people were just rate chasing, they would go to Lending Club, but they're not doing that. They're going to SoFi for their entire ecosystem, getting part of SoFi Invest, Relay, and a bunch of their other loan products that are also easier to use and more accessible than Lending Club. So, SoFi's stock price action. Well, honestly, it needs to be updated because although I just put this screenshot in not too long ago, when we were up 1%, I'm just looking up on my screen here. We're already up 9.4% on SoFi at $30.87, quickly still appreciating into the rest of the day. Whenever we look at institutional ownership, updated as of November, we end up seeing once again another high for SoFi's total ownership, still over breaching 600,000 total shares, on its way to 650,000 total shares. While the total amount that institutions are actually shorting SoFi continues to go down. And it looks like by the time that we get October 30th data, that we will be under 100 million shares shorted. I know that still seems incredibly insane to say, but the fact that we've gone from 150,000 shares all the way down to 100,000, while SoFi stock has essentially more than 2x, is very important. Obviously, it's more than just the stock price that's changing. The entire narrative around the company is slowly shifting, and that's a very good thing if you're a long-term investor. But ladies and gentlemen, make sure you keep an eye on those deposits. I'm going to continue to update you guys from quarter to quarter, all the new products that SoFi Money is offering to try to enhance those amount of deposits that they end up getting, and then what that means for total revenue and margins going forward. If you guys like this sort of content, make sure you guys hit the subscribe button. But until next time, bye for now.